Hey, what's up, everybody? Welcome back to another monthly update with your one and only Kenny Simpson with the Simpson team. Today, we are talking about August. So yes, we call it the September market update, but remember, we're looking backwards at August. Remember also, not all data, all charts, information is just from August. It could be stuff from before June, July. So not everything is updated month over month. But anyways, if you have not ever been to my monthly webinar, welcome. Thank you. A couple notes before we get started. My name, I said, is Kenny Simpson. I'm with the Simpson team. Today's agenda, I'll talk a little about me, market update, hot products, the huge. So anyways, how to reach me. Here's my information. Who am I? What do I do? Why are you listening to me? How'd you get here? As I mentioned, my name is Kenny Simpson. I'm with C2 Financial, the number one mortgage broker in the U.S. They happen to be located here in San Diego. So I'm a mortgage broker. I've been doing this 18 years. I focus on 1 to 4 unit financing for purchase and refinance. Whether you're a first-time home buyer, whether you're a VA vet, or you're a sophisticated real estate investor or entrepreneur, we got you. It's just not me. I also have a team. So if we can help you out, would love the opportunity. If you need to reach me, reach out anytime, whether it's just mortgage related, real estate related questions. All right, so let's jump into it. So before I get started, just want to jump in as we shoot this, as I sit here today. Actually, the CPI number just came out this morning, which was higher. So the CPI number for August came out at 8.3. It's not in here. We don't have any charts because it just literally came out like 2 hours ago. What does that mean? That means the Fed is going to continue to raise rates. Remember, those rates are tied to HELOCs, credit cards, business lines, things like that. But also, as I shoot this video, interest rates are back up on the rise, the 30-year, 15-year fixed. So what does that mean for you? Unfortunately, it means that your buying power is going to maybe tighten. You might have to live with a higher mortgage payment. So what's happening right now, my conversation I'm having with a lot of buyers is I get referred to them. They come to me and say, hey, Kenny, I want to do a conventional VA and FHA, whatever it is. I'm looking to stay around this much. Let's call it $3,500. I want to put 3.5% down an FHA loan, try to get into a starter home. A starter home could be $600,000, $650,000 here in San Diego. It's becoming a challenge. So what's happening is people are having to either get more down from family and other places for down payment to get that payment down, or they're having to figure out if they can afford a higher monthly payment. So the good news is, hopefully, we don't know, we're not sure, we're guessing, we have some confidence that rates were lower, rates came up, and rates will eventually go back down. When is that? I don't know. My guess is sometime late next year, 2024. That's what all the experts are saying. So if you buy a home, let's say, and you wanted a payment of $3,500 and your payment's $4,000, could you refinance in a year, drop that payment down to $3,500? I think there's an absolute chance. Remember, if you're buying the house, you're not 100% sure you're comfortable with that payment, maybe it's not the right move for you. Maybe you got to save more money. Maybe you're going to have to buy something cheaper. But remember, it is hard here in San Diego because we do have an entry-level max. But anyways, that's my little share of kind of what's going on in the market, what I'm seeing. Let us know what you're seeing out there. Let's jump into the monthly webinar. First thing I want to talk about is mortgage rates. As I just mentioned, mortgage rates were literally, a month or two ago, they were lower. So we hit the 10-year, hit the 3.5, then it dropped to 2.5. Now we're on the way back up to 3.5. As I shoot this, it might literally be at 3.5. So not good, but it is what it is. What do I think about mortgage rates? I was just out visiting the number one wholesale lender, United Wholesale Mortgage, for our space, best lender on the planet. And their thoughts were interest rates, they don't really know, but they could go higher. So, I'm going to prepare everybody and say they might go higher before they go lower. So as you can see, the chart we have here, interest rates, they kind of bounce down. They're bouncing back up. We're obviously living kind of in an inflationary environment in the world, as we just talked about. They're higher, they're kind of peaking again. And like I said, it's going to affect affordability and buyers. Mortgage rates projected to go back down, but I honestly think they'll probably go back up in the short term. and mortgage rate projections, August 2022. You got your usual. So the funny thing is, when we shot this in January, the highest rate on this chart, I think by NAR, was 4% by the end of this year. They're predicting that same person is predicting 6% by the end of the year. 2% higher. Interesting. Let's keep moving along. After the end of summer lull, and as mortgage rates stabilize, we may see a return of buyers and relatively strong fall housing market. Let me chat on that. So I will tell you, activity definitely slowed down in July and August. Well, let's say July, June-ish, July, and then it started picking up late August. So I'm definitely seeing a pickup of buyers, offers, pre-quals. Even if rates are higher, I just think people are going to lock in. They're going to pay a little bit higher. What's going to happen? They might cut vacations, lifestyle, things like that to get into a house, which, hey, if that's what you got to do, it's not the end of the world. There's an opportunity to refinance in the future. You betcha they're going to take advantage of it. So I am seeing an uptick in my business, talking to other LOs, same thing out there, talking to real estate agents, same thing. So I would say that's true. Home price appreciation. I don't think the national housing prices will decline in a meaningful way, but there will be some price declines across the country. Mark Zandi, chief economist for Moody. Appreciation slowing. This is the numbers over here slide. We'll see. I think about appreciation and decline. I think it's going to depend where you're at in the market. I think there'll be certain states, cities, parts of the country that are going to do better. Parts of them are going to do worse. Parts will have more inventory. Parts will have less inventory. The blue states where you, like, for example, where I'm in, San Diego, where you can't build, they're just not building houses here. If they do build stuff here, it's usually luxury condos or luxury houses. It's not stuff for the first-time home buyer. Why do they not? It's too expensive to build. Doesn't make sense. So we always have a lack of supply here, but we'll see what happens. So, for example, I have a client putting an offer in a house literally today, last night, and that house is in a nice, good neighborhood. Great house. They redid it. Whoever bought it, flipped it, did a great job. Very charming, very trendy. And it's not cheap. It's almost $1 million. And there's not 30 offers, but there's a handful of offers. It's competitive. So I have to call the agent, try to help my client get in there. So if the house is great and it's priced right, you're getting offers. If it's not, you're sitting. Annual home price growth slowed for about the third consecutive month in July, but remained elevated at 15.8% as 30-year fixed rate mortgages neared 6% this summer. Some prospective home buyers pull back. I agree with that. Helping easing overheated and unstabilized price growth. Looking ahead, CoreLogic expects to see a more balanced housing market with year-over-year appreciation slowing to 3.8 by July 2023. Basically, what they're saying, guys, is the buyer demand is slowed. There's more inventory. Houses are staying on the market longer if it's priced wrong, like I just mentioned. You're not selling. And obviously, if rates are higher, they're ticking back up. It's slowing home buyers down. It's making less sense. And, it's going to slow down housing appreciation. So, which is expected. We can't keep going gangbusters like 2020 and 2021. It's not good. Many experts rate the home price forecast, Fannie Mae. Let's see. So the January 2022 appreciation forecast, this is interesting, with 7.6, 6.2, 5.1. These guys are almost all double. Home price forecast for 2022. There you go. As they met, this is from January. So the average is 11.3. Even in this, home prices have appreciated. Inventory is still historically low. It is, but it is growing in some areas. We'll look ahead. Affordability. That is the problem with these high interest rates and prices. So let's see here. Affordability index at historical low levels. Years when distressed properties dominated the market. Wow, look at that. So it's very low right now. So we'll see what happens. That's obviously having a major impact because of mortgage rates. So this is interesting. Compared to 1 year ago, I'm not sure what loan amount they're basing it off of or what interest rates. But compared to 1 year ago, the monthly mortgage payment rose to 19. This is the average, I guess, whatever it is, maybe on a $300,000 mortgage, I'm not sure, to $1,944 from $1,265. A 53% increase. Your monthly mortgage rose from last year to this year. It's not shocking now. It's shocking when it hit the beginning of this year. It's reality. It's funny how we get shocked by stuff, then we swallow it, absorb it, and then it becomes reality and we live with it. You know, you went back last year, you'd be like, interest rates are going to be 6%. There is no way in hell. Well, guess what? It happened. We're here. We're still alive to talk about it. Monthly mortgage payments increasing. Here it is from the National Real Estate Association. National Association of Realtors, sorry. So that's crazy, like just a year ago. And then in 2020, it was 1,020. The payment in 2020 of April was 1,020. And we're close to that in June, July, and it's 1944. So it's literally up like, sheesh, it's almost doubled. Almost up 100% from 2020. It's pretty crazy, guys, when you think about how cheap rates were. Mortgage payments to income ratio. Yeah. You can see 2020 was really low, and today it's gone back up. So you can see this is what happens. Rates are lower, things decline, things go up, and rates are higher. Obviously, housing's higher, so it's a combination. Home with a median income, P&I payments to income. Median income, column 1. And then qualified income, second column. Interesting chart. Wow. Interesting. We are in a place where strategy, discussions, and planning are critically important to make sure we can thrive during these challenging times. Stay nimble, stay informed, and remember, housing is traditionally one of the first sectors to slow as the economy shifts, but it's also the first to rebound. Great quote. Something I'd like to just jump into. So what's happening is, right, we're hearing a couple things. We're hearing the word inflation. We're hearing the word recession. And we're hearing the word, because we're talking about housing correction. So what they're saying is the first thing that usually hits when the economy slows is the stock market, right? The second thing that usually kind of reveals its head right now is housing. And the third could be consumer spending for jobs and stuff like that, right? So technically, if we've had negative quarters, we're in a recession. Some people say we're not. People are still spending. It's hard. Like technically we're in a recession, but in reality, it doesn't feel like it. So what they're saying here is housing is correcting. Stock market already is corrected. We saw that. Housing's correcting. So what's next is that the consumer, the recession, is that coming? That's usually what happens. So once the recession thing hit, rates usually tend to come back down. They'll bring the rates down, and that's when housing rebounds. So, I'm not sure when all this is going to happen. We'll obviously see the stock market correction. We saw crypto correction, cryptocurrencies. We've seen, housing chill out a little bit. You're seeing some consumer stuff, spending and things like that, but it takes time. It's lagging. So just like when interest rates go up, it took time to get the market here. Average days in the market. July 2022, 14 days. Interesting. Okay. So 14 days average on the market. That's if it's priced right. If it's not, you're not there. That's average of the homes. But if you're not, you're way higher than that for sure. New home sales. 2022. We got July inventory. They're down. So new home sales are down. Another thing that people are talking about is the new home listings are down. Not new built, but new home listings are down month over month. We noticed that. Our buddy Logan at Housing Wire pointed that one out. So thank you for that, Logan. So pay attention. Why is inventory rising? I'm like, well, your home didn't sell in August. It moves over to September, right? And we're taking all that inventory moving over. Even if it's pending, it's moving over. So stuff's sitting on the market longer. It's rising inventory. Don't think, rising inventory means new home listings. You got to read the data. Got to read it. Total home sales and volumes, 495. You can see from 2021. So it's actually declining home sales, less. Percentage of distressed properties. We go over this over and over. I don't know if it's because of, there's so much equity, or people locked in low rates, or the consumer's strong, or they're just not really doing many foreclosure short sales. There are some happening for sure, but it's still 1% of the sales or less. So that's, if that number comes higher, it could be problematic, but we're not really seeing it get much higher. So, good old home prices. So the percentage of year-over-year sales. Obviously, we're seeing a decline in sales, right? Like, this is obvious. Like, we just showed you the chart above. Change in sales, which is changing, obviously going to change pricing. We all knew, like 2020 was crazy. 2021, beginning of this year was booming. And then we're just seeing the decline in everything. This is healthy, has to happen. You might not like to hear that, but that is the reality. Higher rates suck, but they're also good because we got to chill this thing out, right? It's too much. Change in home prices, you can see still going higher. I mean, home prices have gone up. Like, this is crazy. Change in inventory. This used to be every single one of them dark blue. There's nothing dark blue. And there's actually some orange. So for you folks that are going to move to Alaska, there's your change in inventory. So pretty crazy. It's really cool to look at data, guys. Really, that's why it's great to watch this or somebody else, to look month over month to see what's going on, so you can help your clients, you can give them feedback, you can sound intelligent, all that stuff. Months inventory for homes. So last 12 months, as of July, there's 3.3 months on the market. I think January was like all-time low, so we're almost, we're about double from that, which is good. So healthy. Year-over-year inventory levels. It was really bad, but now we're coming back up. So we're seeing some more inventory, which is good. So let's talk about hot products. So exciting news, for us to live anywhere, but especially here in California. The 2023 increased conventional loan limits. Keep in mind, FHA will not come out until the beginning of this next year. VA is always unlimited. I know it sounds weird, but not every lender will go to $4 million or $3 million or $2 million. But if you got a $4 million loan, you want to put 0% down, you can qualify. I can do it for you. So the increase as of right now is so not everybody has this. We have the opportunity to go to 715. So if you have a mortgage at 715, we can give you that conventional financing, which is huge. I think the number will be a little bit higher, but that's what we're willing to do now because we don't have all the numbers. They'll come out in November. So also in California, we're thinking the high balance for like LA County might be upwards near 1.1 million for a high balance loan with 5% down. I mean, is that not insane or what? But that's the reality. So these increased loan limits are huge. It's going to help for 1, 2, 3, 4 units. I think a 4-unit in LA County and the high balance is going to be $2 million or more. That's insanity, guys. So it's increasing because obviously things are increasing and they're sticking up with it. So this is going to really help people. I'm already helping a client out with this now where we're able to drop his rate like 0.5% to go to 715. So exciting news. Thought we'd share. How to reach me again. Here's all my information. Again, my name is Kenny Simpson with the Simpson team with C2 Financial, mortgage broker by choice. Thanks for watching. Appreciate your time. I would really appreciate it if you would share this with others. It's really good information. If you don't watch this, you should be watching somebody else. If you're in real estate, if you're a real estate investor, you're a real estate agent, you're a mortgage broker, you're in title, you're an escrow, you're an appraiser, you're anybody that cares about real estate, you're a homeowner, you should watch this. Why? So you know what's going on. What's going out there in the market. What's trending, what's not trending, what's reality. But what we like is just look at the data. So as we're looking at the data, let's recap. Rates are going back up. Inflation is definitely going up. So feds are going to continue to raise rates. My prediction is rates are probably going to go, maybe higher from here in the short term based on what I'm hearing. Buyers are starting to come off the sidelines because they're getting price reductions, better deals, seller credits. Buyers are having to accept higher payments with hopefully in the future of lowering that with a refinance, right? We don't know, but you got to make sure you can afford that. Fannie and Freddie increased their limits, right? So that's exciting. FHA will come out soon. VA, as I mentioned, is unlimited. But how can you use this information to help you and your clients? Study it, learn it. I can tell you right now, if you're a real estate agent, buyer, whatever, these are the conversations going through people's mind. Is it the right time to buy? Are things going to get cheaper? Is there a recession looming? Am I going to have my job? The what if? Nobody knows, guys. All we know is the data. So I will tell you this. If you buy a house today, you're buying it for lifestyle. You're buying it to live there. That's where your family is. You live, or you're single, you have people over, whatever it is. That's a lifestyle choice. Is it a good time to buy a house? You have to look at that because last year, rates were cheaper, payments were cheaper. But the house that was listed for $1 million, you're paying 1.2. The house listed was 600, you're paying 650. Now the house is listed at 600, you might be paying 575 with a $10,000 lender credit. Maybe in some other markets it's better. With an opportunity to refinance in the future. I don't know what's good for you. The real estate agent doesn't know what's good for you. You know what's good for you. If you have a stable job, if you think buying is the right thing, great. If you're going to live in this house for 10 years, do you think in 10 years that's going to be worth more or less? You answer that question. Only you can. I will continue to buy real estate. I will continue to invest in real estate. Why? Because I believe in it, because I know it. And also why? From the pandemic to where we're at right now with inflation and everything, real estate's done pretty damn good. And if you bought a home in 2019 or 2018 or 2021, 2020, you're probably doing all right. So what are you going to do? I don't know. So what can you do? You could possibly look at putting more money down. You could possibly look at putting less money down, keeping more money in the bank. You could possibly looking at buying down the rate. You could possibly look at an ARM, But you have to do the math. You have to do the data. Make sure the team you work with is the best. They're guiding you through this process. But you, at the end of the day, you have to be comfortable and you have to feel like this is the right decision for you, your family, whoever makes those decisions. But I appreciate you guys watching. Until next month, stay tuned. I will be very interested to see where interest rates are at. Are they higher or lower? What's your prediction? And will there be more buyers off the sideline or less? Until then, have a great month. Talk to you guys soon.